With the passage of the Regal-Neal Interstate Branching Bank Act, this helped reduce costs for banks. It helped reduce redundant facilities and redundant employees. In-store branching is another way that banks have helped reduce costs. They're less than a quarter of the expense of standalone brick-and-mortar facilities. They are profitable 12 months in advance than standard brick-and-mortar facilities. Point-of-sale terminals also help reduce costs for banks. They've allowed people to write less checks in everyday life. ATM machines are another thing that helps to reduce costs. They're a third of the expense of a human teller, and some banks have moved towards charging people for using human tellers. The average ATM has 200 transactions a day. Call centers have been an area that banks have tried to help reduce their costs. Some banks have moved their facilities overseas in countries like India and China. This has produced some difficulties with some of the customers because of the language barrier. Some advances other than that have become in banking is online banking. This has allowed people to pay bills online, check their balances, transfer funds. Cell phones have also improved the area. It's the same thing. People will be able to do the same things, transfer funds and check their balances, pay bills. Online banking is another way that banks have tried to reduce costs. Some companies are just doing solely online. This forces customers to do transactions only through ATMs and doesn't allow for one-on-one customer service to resolve issues with the bank account. This does leave opportunities for identity theft through customers putting their information through online. So this is an area that banks have to move forward and try and innovate and find new areas to expand and keep customers' information safe. JP Morgan has employment opportunities for FIU graduates in Florida. They've moved everything, their hiring process to online basis. That's the only way that you can try and become an employee of JP Morgan. You have to submit your resume online and submit your information online, and they're responding to you through email. New areas to keep customers' information safe is things like smart cards, mobile computers to keep balances, fingerprinting identification, voice identification, retina identification. The Consumer Price Index from 2005 to 2009 rose and fell, but it stayed within the Federal Reserve's average limit, which is 2 to 3%. In 2008, it fell to almost no. Personal saving went up in the period from 2005 to 2009. And the highest percent gain was the change from 2005 to 2006. But the highest dollar value was in 2009, with the percentage of saving as compared to disposable income with the highest rate of 4% in 2009. The U.S. government spent more than they brought in taxes in the period from 2005 to 2009. With the year 2006, they overspent less money than they did in the previous year. State and local governments actually saved money from the period 2005 to 2007. And then in 2008 and 2009, they overspent the money that they brought in. The money supply grew in every year except for 2006, when M1 decreased by 0.3% from the year before. The same period from 2005 to 2009, M2 expanded in every year, with the highest gains and average gains in 2007 and 2008 of 9%. In the same years, M1 also expanded with the greatest increase in the period of 13% on average. The gross domestic product rose from 2005 to 2008, and then fell in 2009. Financial and corporation dividends didn't follow this trend. They started to fall before the gross domestic product fell. It started in 2008 and then fell in 2009 as well. The federal funds rate rose from 2005 to 2007, then fell in 2008, rose a little in 2009. Most securities followed the same pattern except for in 2008, where the 5-year U.S. Treasury rose 200% in that year, and the municipal bond index rose 19% in that year. 2009, the treasuries that saw the biggest gain were the 1-month Treasury and the 10-year Treasury. Mortgages held by all institutions rose from 2005 to 2007, then fell in 2008 and 2009. Commercial banks fared much better in this area. They increased their dollar value throughout the whole time period from 2005 to 2009. Personal interest payments didn't follow the same pattern, increasing from 2005 to 2007, then decreasing in 2008 to 2009, causing banks to have to charge off a large amount of these loans. 2008 saw the highest increase in charge-offs, being 20% in that year.